All right, so here's everybody's favorite leveraged ETF, or at least my favorite. I don't know if it's America's darling when it comes to leveraged ETFs, but it is one of my favorites. It is the UVXY. UVXY, baby. Yeah, and honestly, though, it is really one of the best. I'm talking about the best of them all. Preferably, it's the only one I like to invest in, if you want to know the truth. It's the only leveraged ETF I go for. It's the only one I think you should go for, and I think you're missing out on a great buying opportunity if you miss out on it. So continue to buy this leverage ETF because it is the best investment as far as leverage ETFs you can get. Now, I'm not saying you should buy it in the traditional way. This is actually an ETF that you need to bet against using put contracts. Now, I do not recommend, in fact, I advise against it. Do not, and I repeat, do not short the UVXY. That is a really bad move because if a market crash does happen, the UVXY could go up quite a bit. So shorting the UVXY is a really bad idea. Instead, what I would recommend is buying put options, long term, by the way, at least lasting about 8 months to a year, 6 months maybe. Yeah, if you want to play, that's the shortest I would go though, if we're going to go out in the future on it. But 6 months would be the shortest I would go for it. What I've done with the UVXY, and one thing I like to tell everybody about, I'm going to try to condense this into a very short video, but everything I do with the UVXY is very simple. I buy a bunch of put contracts at first. This is how I started off. I actually bought them at really low prices because I got them at low strike prices too. So naturally the premiums were a lot lower, but because the reverse split happened like I calculated it would, it actually went down quite a bit faster than expected. So because the UVXY went down so quickly, I was able to capitalize on the overall value after the reverse split. Now I keep buying more shares, obviously, of the UVXY because here's the thing that people don't anticipate. They don't anticipate, one, the market suddenly crashing. This is another thing. So the put options, they're going to be fine if the market keeps going up. And honestly, naturally, this is a decaying product. The UVXY is a naturally decaying product, so we have to keep that in mind too. But yeah, you want to, if you're going to, during a market bubble, during a market crash, market bubble, when the market crashes and everything goes down, the UVXY is going to go up like crazy. The value of the UVXY is going to go woo. So what you want to do at that point is once you feel like the full crash is taking effect, taking its course, that's when you would most likely want to get put options right below the strike price, I think. Because I think once the UVXY goes up that crazy, it's going to go down that crazy, in that crazy amount. So if it's going to go up 50%, it'll probably most likely go down 75%. You know what I mean? That's the UVXY for you, man. That's how the UVXY works. It's a leveraged ETF. It's very volatile, and that's one of the reasons why I love playing it, because that's what's allowed me to make the money in the markets is through the leveraged ETF plays for the VIX property, the VIX style, the volatility index style ETFs. They're the best. They really are the best. And in fact, if I was to recommend anything, it would always be those, because you can functionally bet against them, which is super cool. So as I bet against them, I'm also, as it continues to lower in value closer to the strike prices for the put options, think of the put options like alligators, right? And think of the current price as like a little squirrel falling into the alligator's mouth, right? So as it goes closer and closer to the alligator's mouth, it's possible the squirrel, while being really stupid, is also potentially really fast. And that's how you should think about it. So there is a possibility that while it's down to $20 per share, it could easily jump up the next day to 38. So what I do is I continue to buy on the dip for the UVXY because it's not going to kill my wallet any, because it's still falling into my put options. So if it was to suddenly jump, I could actually sell the shares that I've been purchasing at a profit. But the prices for the put options are slowly going up like exponentially, so it's really nice. I'm still a huge fan of. I love the leverage trade plays. I can't help myself. They're very fun to play, and I just have such a good time doing them, playing them. I often I don't know. It's just the way I look at it. It's very simple. With these plays, if I could play both sides, which I'm doing functionally, this is why I suggest the UVXY to people who want to play more of an active role in the markets. And honestly, I only ever check the markets like twice a day. I don't hawkeye the markets. I just know that whatever it does in the morning, I'm curious about, and then whatever it does towards the end of the day, I'm curious about, and I want to see if I need to take any actions during those two time frames. Normally, I don't have to take any actions, or at least any crazy actions. I do take an action, of course. I either buy more or just sell more for the time being. But yeah, it's interesting, and I love it. It's a fun way to play the market. It's a profitable way for me, at least. If done wrong, or if misinterpreted, it could be, you could actually lose money. I don't recommend people do what I do, because they may not have the stomach to handle it. You have to be able to handle volatility, and I think you also have to be slightly a volatile person to be able to do what I do, to be able to handle it so well. And I've handled my own volatility in life very, very well. But yeah, I don't know. I think that the beauty about the UVXY is you don't want to buy stock in it. I mean, look, okay, I take that back. You do, but only if you have the protection of put options. Because look, the market's dancing on the knife's edge, right? But also it's possible the Fed can keep pumping up this market to where we'll keep seeing gains and record highs for maybe even years. You never know. So that's why you should bet against the UVXY, because when you bet against the UVXY, you're essentially saying the market's going to be fine and keep going well. To buy stock in the UVXY is kind of a bet, or even a call option is really a bet against the market. I prefer to just buy the stock, because I think of them like tokens that I could trade in eventually if the market does crash, and I'll get a pretty decent return either way. So as it keeps dipping in the UVXY, I continue to buy more shares, in theory reducing my average cost, obviously, and pretty much good from there. It's very fun. And hold on. Oh, give me a second. It's a fun time though. I'm just trying to think of what else I need to let everybody know. I think I've pretty much covered the basis of the UVXY. Leveraged ETFs, like I said, they're meant to go down. They're inverse ETFs. They're not intended to be long-term investments or sorry, my hair's on this. They're not meant to be long-term investments by any stretch of the imagination. They're meant to be there for you to really just bet against. If you want to profit off of it, you just bet against it. But you should also keep in mind the market could crash exponentially, so you should also buy into the UVXY for leverage for what you can trade later on down the road, because the market really is dancing on a knife's edge, and it's freaking me out sometimes. But I want to thank you guys for taking the time to view this video. I've been trying to make these videos and this audio, what do you call it, less lengthy, even for the podcast. I think there may be people who get mad at me for doing it, doing podcasts that are so just so low in length. I know podcasts are typically nowadays like an hour and a half, but I think I can condense enough information per video clip, per audio clip as well, that'll get the point across. I just don't want to give any filler. I want to give all the essential information to you right here, right now. And actually, I didn't even give you the essentials. Hold on. I was too busy talking about it. So there should be more time. I should utilize more time in this video to show you guys what I want to talk about. Hold on. All right. I actually have no idea what bats is, but that's okay. Previous close range, day range, your range. So your range has been all the way from $225.95 all the way up to $321.80. So here is kind of a reason I'm all about this, because the market does crash. It is very well possible that we could get to the range of $321.80. So it is heavily possible. And I think, like I said, we do underestimate the volatility in the market. What's brilliant is that the short-term volatility is, if there's a big major crash in a day and it lasts for maybe 2 days or so, these are very short-term futures. So because they're short-term future contracts, the value goes up like crazy if a massive dip happens. So per 1%, I noticed the UVXY went up 10% in value per like 1% S&P 500 dip. It went up 10% in value for the UVXY. So like I said, it's the inverse, but it's quite the hell of an inverse. And I'm a big fan, one of the biggest fans of the UVXY, and I will continue to promote them. There's not a lot of statistics that you can get on the UVXY. It is a leveraged ETF, so I can understand why Google doesn't have a lot of data on them. But there's really not much to understand about leveraged ETFs, though. They're very simple to conceptualize. They're just really, in all actuality... Oh, sorry, I muted myself. In all actuality, it's really simple. You just have to, how do I explain this, man? I'm having a tough time tonight. You just kind of have to, I don't need to show this, but you just kind of have to know, you have to play it day by day. I played day by day, and now I'm finally at a point to where no matter what happens in the market, I'm totally fine. I would prefer it if the UVXY continue to dip, because, well, that means the market will do well for a while, like it has been, and the Fed will keep pumping it up. If it doesn't, though, I'm still okay, because if the market does crash, which I have faith it probably will, sadly, and I don't want to have faith in that, but the data shows that it's going to crash at some point. It's going to be, there's several catalysts to all this, so I'm still buying more shares, though, as it continues to dip, obviously, because I want to lower my average cost. And I do want to profit off of this market crash if it happens, which it honestly should happen. And I'm not going to be idealistic and think it isn't. It's going to be one of the greatest wealth transfers of all time. And that's just the way it is, man. So rough. Yeah, a big fan of the UVXY, and I think you guys will be too. Betting against it, obviously, but getting the put contracts on it and buying some shares periodically. It's one of the best ways to do it. But anyway, I want to thank you guys for taking the time to view this video once again. Do me a favor, just stay safe, stay healthy, and just try your best to have an incredible time. And